All right, things are finally not looking so hot in memory land.
Newsflash, memory is still a commodity, and there is still some cyclicality in this, even though the message has been tempered as of late, and now the expected future cycles are expected to be more manageable, less severe than in the past. So at least there's that. That's good.
We've been talking about the memory market all along here on Chip Stock Investor, and we're going to look at this through the lens of Seagate, which just reported this week. A number of others, SK Hynix, have reported as well. We'll be looking for more guidance here in the coming weeks from some of the others. Let's take a closer look at Seagate, an integrated device manufacturer of memory. And their memory, especially in hard disk drives, have become quite popular these days. They fall into this bottom portion of the computer memory hierarchy where they make hard disk drives. And we're going to do this with the help of our friends over at Fiscal.ai. You're going to see a number of charts from Fiscal today detailing all of the financial metrics that we're looking at Seagate.
We'll come back to this chart in just a moment, showing you how the incremental increase in revenue translated to almost an exactly identical increase in net income in the last quarter. Pretty incredible. We'll explain why that is.
You can get 15% off any paid plan over at fiscal.ai/CSI. You can make cool charts like we do here at Chip Stock Investor and analyze businesses with all of the financial data that you need. Fiscal.ai/CSI.
Let's jump back to this chart really quick. So hard disk drives, HDDs, this is, as we've discussed in prior videos, the old technology for mass storage. But with NAND flash and SSD prices on the rise, plus with hyperscalers and other enterprise customers just needing so much data, and they need to be able to store that flexibly for a variety of different AI applications and architectural build-outs, HDDs are having a resurgence as of late, which is fantastic news for the little duopoly that has been left standing, Seagate and Western Digital, both of which we own here at Chip Stock Investor.
Here's a few highlights from Seagate. Just call out a couple of them here. On the hard drive, exabyte shipments up 34% year over year. 90% of that shipped into the data center markets. That's a well-known fact now that we're going to look at a fiscal revenue chart here in just a moment so you can see what the breakdown of that revenue is. But data center revenue, $2.9 billion in the quarter, up 57% year over year. And just to call out there at the bottom on what products Seagate is shipping. Currently, they're on Mozaic 3. Those are the ones that they've been shipping across all major cloud customers. Then they have Mozaic 4. That's the one that has over 40 terabytes per device, ramping with the two largest global CSPs.
So Amazon and Microsoft?
Those are the two largest. And then also Mozaic 5 is in the works. Qualification shipments starting in calendar year 2027, late calendar year 2027.
Let's jump now to revenue. This is not the explosive revenue growth you're seeing from the memory oligarchy, the memory chip oligarchy, SK Hynix, Samsung, and Micron. HDDs are old technology, mature technology, but still getting a pretty fantastic run of growth during this bull market. And as discussed 3 months ago, Seagate has said, in part because of that, they are not going to be expanding their manufacturing capacity. Instead, they're going to be able to grow their revenue just by simply increasing the number of exabytes shipped per device. And as Casey just mentioned in the previous slide, those Mozaic 3, 4, and 5 scale-ups, lots more terabytes able to be crammed in per HDD. And that is all pulled off by Seagate's internal vertically integrated manufacturing of HAMR technology. They have some of the tooling needed for that also in-house. And as a result, yes, not the most explosive growth, but pretty stable growth, up 48% year over year. And because all expenses are paid for, and as they migrate more of their product line to the HAMR-based technology, basically all of that incremental revenue then becomes profit. So you can see the quarter over quarter jump in revenue and net income in absolute dollar terms basically increasing by the same amount. This is not the same boomy, busty type story happening with some of the memory names right now.
Another great chart from Fiscal. One of the nice things, you can break revenue out by segments and key KPIs or key performance indicators. This one taking a look at Seagate's data center revenue, which is in green, versus their edge IoT revenue, home PCs and the like in orange. You can see that is obviously not the growth segment there. Data centers where it's at.
Yeah. Note on that, there was the nice little sequential uptick in revenue this latest quarter, even in edge IoT. That was a result of NAND flash pricing, SSD pricing going up so much. So more customers, maybe in like the PC market, deciding we'll just go with a hard disk drive. We'll go old school.
Careful, don't drop it. Here's a look at Seagate's balance sheet. Total cash and cash equivalents in green, long-term debt in orange, and current portion in red. You can see that's almost down to nothing. They have been paying down that long-term debt as it matures, and over the course of the next 2 years, most likely that debt is going to be completely gone, or at least most of it will be gone, and they'll be net cash positive.
You'll see a note on that here on our final slide in just a moment, but first, one quote from CEO Dave Mosley, just talking about the sustainability of this growth cycle, tempering some of the commentary as of late about memory no longer being cyclical. Essentially, the discussion here now is, well, it's just going to be a less severe cycle. And that is showing up in some of these long-term agreements that Seagate has been able to land with hyperscalers, much like all the other memory companies are now announcing. So what this means is, over the course of the next, let's say, 3 to 5 years, is there going to be some cyclicality? Yes, I think we can most definitely anticipate that. And in fact, you'll see that in the guidance here in just a moment. There is an expected slowdown in the growth rate, which is healthy, but the growth story is very much still in play. One important note on this, cyclicality in the business, unfortunately, doesn't have to happen for stock prices to go down quite dramatically. As we know, there's a big unwind happening in the highly leveraged bets that were being made on memory and other semiconductor bottlenecks. At this point, we still think this is a much needed, very healthy sell-off, maybe akin to what happened with the initial Japan carry trade a couple of years ago. But the underlying fundamentals of this growth cycle are still healthy. And so this is just a reminder that it does still matter at what price point, what valuation you purchase stocks, even if the growth story remains very sound. But at the end of the day, this is still a cyclical business. HDDs in particular are very mature technology, so we fully expect this to still be treated like a cyclical stock over the course of the long term.
And here's a look at the guidance for Seagate for Q1 fiscal year 2027, corresponds with Q3 of calendar year 2026. Here's revenue coming in at the midpoint, $4.1 billion, which would imply around a 36% year-over increase, which is, as Nick just mentioned, is a bit of a deceleration there. And we'll call out the reason for some of that long-term debt getting paid off down there at the bottom where it says senior notes due in 2028 of about 2 million shares. So they get to pay off a little debt.
Absolutely. And the big takeaway here, in addition to that, debt getting paid off, cash is most definitely going to get added to the balance sheet along the way. They'll be able to repurchase stock and service their dividend. Take a look at that operating margin. These are record levels of profitability for companies like Seagate, or at the very least, profitability unlike what they've seen for a very long time. And this is allowing them to get their business back in fighting shape, get the balance sheet looking really healthy and clean. So it'll be interesting to see what these companies like Seagate and Western Digital and hard disk drives decide to do with this moment of strength that they're enjoying in the coming years. And if they decide to transform their business models in any way to move in a different direction. As it stands right now, Seagate transitioning its entire portfolio over to its in-house technology, HAMR, HAMR based technology, to increase the number of exabytes per disk, per platter in those HDDs. And that's a pretty good place to be right now. Focus on cost control, use the profitability to improve the balance sheet, and maximize shareholder returns. We're happy having Seagate as part of our basket of memory stocks.
Thanks everybody for watching. Make sure you hit the subscribe button and hit that notification bell so you actually see our videos again in your feed and we don't just disappear into the ether. Thanks, Google. And make sure you watch this video that we recorded at the beginning of the year, how to invest in memory stocks in 2026. There's some great content in there that you should watch before making any decisions about memory in your portfolio.